What is going on, beautiful people? It's your real estate go-to Deontay here, as always, with another reaction video where we are taking a look at the shortage situation in the housing market. This is on CNBC, so we're gonna see what's going on, what they are saying, and how it relates to our Orlando market. And always make sure you hit that subscribe button, like, comment, and subscribe. Okay, so let's take a look, see what they say, and see what holes or what golden nuggets we can find to apply to Orlando.
Lennar reporting stronger than expected quarterly results, delivering more than 1,000 homes than predicted. It's the latest sign that demand for new homes remains elevated, improving for the fifth straight month in April. It's in stark contrast to the sales of existing homes, which continue to fall as high mortgage rates are forcing home.
Existing homes are resale homes. We said that in a few videos before, okay? People are sitting on rates that are 3%. Why am I going to go into the market unless I have to move or a major family situation happens? I'm staying in my house and I'm not paying the higher rates. So that's why we're seeing that existing slump.
Homeowners to sit on the sidelines. Joining us right now to talk more about the tightening housing market is Daniel Hell, chief economist at Realtor.com. Good morning to you. Square the circle between the Lennar numbers, if you will, and what we're seeing in terms of existing homes.
Yeah, so Lennar's numbers were good. We've seen new home sales actually pick up in the recent data, so it's not terribly surprising to see a good number from a builder. But what we haven't seen is existing home sales follow the same trajectory. And one of the big reasons for that is that supply pressures are really different for the two sides of the housing market. Existing homeowners, many of whom were able to refinance over the last couple of years when mortgage rates were at record lows, are sitting on a really good situation right now. Their payments are low, their mortgage rates are low. There's not as much incentive as there normally would be for them to get out and decide to make a move, which means they're not putting their homes up for sale. There aren't very many existing homes for sale.
What do you see as the tipping point in that scenario? Meaning, is this just a wait because you think that rates will continue to either rise and at some point those folks who had a 5 or 7 year arm are going to get hit and then they're going to have to sell, or what?
I don't think there are enough of those folks with the arms that we're going to see a hit. I think instead it's going to be a bit of a gradual return. The further we get from those refinancing points, the more time homeowners have to build up equity, and the more their life can change to create the kind of situation where their current housing isn't a good fit for their needs. And I think those two.
And that's the main thing that we are seeing, right? Like I mentioned before, life changes are what is, especially in this market, is making people move. New job in another state, more kids added to the family, or downsizing. All the kids are leaving, and you're empty nester.
Two factors are going to work together. I think, to your point about 5 and 7 year arms, it's probably going to be in around the 5 to 7 year mark. That's when we see homeowners tend to have enough situation change that they're looking at making a move, except for those people who are, having life changes now or job changes now. There are still a good number of those. We're looking at more than 4 million home sales throughout the course of the year, much lower than we saw during the pandemic, but people are still moving, just not nearly at the rate that we saw before.
We're showing the various home builders on the screen, D.R. Horton, Lennar, you're looking at Pulte Group, KB Home, et cetera. I mean, would you be bullish? I know you're not picking individual stocks, but would you be bullish on that group at this point in the ball game?
Our data show that we're in a shortage situation when it comes to the housing market. If you look at vacancy rates, they're very close to long-term lows. And by our estimates, we are underbuilt to the tune of 2 to 6 million homes, depending on the assumptions that you make when doing the analysis. We're not alone in noticing that the housing market is short millions of homes. So home builders have a lot of opportunity. The question is, can they build profitably in this environment? I think that's a difficult question, but there's certainly no shortage of a need for housing in this country.
How regional is this in terms of where you're seeing real growth and where you're seeing maybe things reversing in the wrong direction?
Yeah, so interestingly, the most expensive areas of the country, the coastal markets, the West in particular, we've seen some softness in home pricing and in competition if you look at measures of how quickly homes are selling. But in contrast, the affordable areas, so parts of the Northeast, not the biggest cities, but outside of the biggest cities, and then the Midwest, where we're still seeing real estate activity relatively elevated, competition among home shoppers, and homes selling very quickly. And we think that's because of affordability.
I'm surprised she didn't mention Florida. So what that is saying, guys, is it looks like we're moving out of the quote unquote affordability range, according to Realtor.com. She didn't mention that. She said Midwest. So we are getting up there. Our median price point in Orlando, many of you who've grown up here, it's in the 400s. Is like, what? Where? How? When? Why? So, hey.
You can still find it in the Midwest, especially if you're coming from a major market and bringing your big city salary with you. And that's helping to keep the real estate markets in those regions relatively active.
Is your expectation that the economy gets tougher over the next year or gets better? I ask because that, I think, would underlie a lot of these your thesis here.
Yeah, I think the economic growth is going to continue to slow, but I think we're not far away from the end of the Fed's tightening cycle. I know they threw a bit of an unexpected turn with the increase in the forecast for the short-term Fed funds rate, but I think it's clear we're getting closer to the end of the tightening cycle. We just need to see inflation come down a bit further. We've made some progress on headline. Core needs to follow suit. But I think once we see that happen, I think as we move into the second half of 2023 and into 2024, I think things are going to look better.
Okay, Danielle, thank you. Appreciate it very, very much.
Boom. That was good. That was good. Chief economist Danielle Hale for Realtor.com. Drop in the comment section below what you guys think about kind of her commentary, how they're seeing it at Realtor.com. Majority of it is spot on in regards to Orlando. I was surprised that she didn't mention Florida as an affordable location, right? She mentioned Midwest, Northeast. That didn't miss me. So, what does that mean for us in the next 4 to 5 years? I'm thinking, right? Are we now going to enter those, Silicon Valley type situations where Florida is no longer an affordable place to live? That's where my mind goes. So that was very interesting. Let me know what you guys think in the comment section below. And listen, if you guys are looking to get into the market to purchase a home, if you're looking to sell, my contact information's in the description. Reach out. This is what you guys have me here for, okay? And always remember, you thought I was going to forget, but I didn't. But always remember, guys, in real estate, there are only 2 people that can get you exactly what you want, okay? That's D and you. Talk soon, guys. Peace.